All right, what's going on, ladies and gentlemen? Welcome back to the channel for another weekly update. I'm going to start off by saying, hey, guys, I put a lot of time. Like, I'm serious. Today alone, I started this at 9:28, started recording these videos, and I'm here at 10:43 right now. This sucks. Okay, it sucks, but I'm willing to do it because, hey, guys, I'm willing to put out something that I take pride in, okay? Right there, 10:44, all right? I take pride in this, all right? So I'm not going to put out a shitty piece of content if I can control that, all right? And if I got to keep recording videos because my dumbass keeps, like, literally getting off topic and talking about bullshit the whole time, like, yeah, I'm going to do it until I finally get it right. Okay, so this video, we're going to strictly talk about TA. We're going to talk briefly about the dollar. That's it. Yeah, that's literally it. All right, so on Friday's video, I mentioned that we had declining volume, and that was when the body of the candle was down here. Okay, the body of our daily candle all the way down here, and we had declining volume. And what did I tell you guys? That was a sign of that's telling us, like, hey guys, we are running out of sellers. That's what that means. Just like when you have a rally going on with declining volume, that means you're running out of buyers. That's just literally what that means. Like up here, look at this. All right, look at this. All right, you're going here. This whole consolidation here, you are running out of volume down here. If you look down here, and then boom, volume starts heavily stepping back in because boom, the opposite side of the trade steps in. People like flipped. All right. But when you're running out, the volume is going to be telling you that. Okay. It tells the story. All TA should be telling a story. It's really all TA is the psychology of money, literally the psychology of buyers and sellers in the market. That's exactly what technical analysis is. Anybody who thinks otherwise, like, dude, they don't know what TA actually is, because that is what it is. And straight up, guys, look, okay, I told you guys we're running out of sellers, and look what happened. The volume literally started exponentially stepping back in, going into the end of the day. It just kept rising, all right, as we were rising here. That's why, guys, if you're following the Webull account, congratulations. You got to literally take profits very close to the bottom, if not at the bottom. I called this out. All right, like this was it's pretty sexy. I also called out this thing over here. Like, this is literally what I'm showing you guys exactly what works. And like, yeah, I mean, I get it. It's goofy, it's silly, it's all those things, okay? But at the same time, it's simple enough that it literally is the only indicator that you really need sometimes to show you, hey, like, look at that. The sellers are running out. We're probably going to get a bounce, okay? And it's the same over here. The sellers are running out. We're probably going to get a bounce. And I told you guys that on Friday's video that we're probably going to see a bull trap rally because of how so many people are just piled on the short side of things, all right? And this is where we likely would see short covering right at the bottom. I told you guys, I think it's, I literally made a post somewhere over here saying that I'm going to be taking profits just because we are getting closer to the bottom. Like, we are literally, like, this is like the expected place that people would start covering. And it's because, hey, this is your last point of support until you go way down. That's literally how it is. Like, and it's expected. All right. Don't use that as your justification for buying or going long at these levels. All right. Because I'm telling you guys right now, it's guaranteed a bull trap rally. Okay. Like, it's not that I can guarantee, that's a promise I can keep. Okay. And that's strictly because I know the economic environment is absolutely dog shit. And it's definitely hasn't gotten any better. Literally has not. Okay, inflation's still like running rampant. I get it. It's not accelerating. Okay, but it's not going down. And that's like the only reason it would be going down is, you know, if they do what they gotta do. And we've talked about that extensively here on the channel. But at the same time, they can't even do what they gotta do because that makes their debt more expensive. So, I mean, it's just terrible for everyone. All right, guys, so the TA, we got a hammer candlestick that formed here. All right, that suggests that we have a bullish reversal forming right now. It is happening at a key level, the only level until you pretty much fall down to this gap fill. Of course, you can stop right here. You can come to like the peak of this little rally we had going on over there. But I'm not even going to have that on our chart. I don't think it's going to mean much. We will be relying on our the TA we normally use, all right? Which is, yeah, I mean, we rely a great deal on these oscillators. They pretty much, they tell us when things are happening, they tell us. They literally do, okay? There's a reason, like, I had to take profits because I saw this forming, okay? I literally saw this on the hourly time frame forming as we played out, and I actually called it out. I called it out over here. I said it was like that. And I said, it doesn't look like it's finished carving out. It looks like it's going to be dipping back down and then carving out. And it literally did over the upcoming day. All right. Like, that is That's expected, guys. Like, this move is expected, all right? And what I do want to point out is that you have a bullish engulfing candle on the hourly time frame completely engulfing this, almost a percent move down, all right? Which, guys, that is strength. And look where the volume stepped in. I told you guys, like, we were running out of sellers. Now, the opposite side of the trade was going to start stepping in. And on top of that, shorts were going to cover quick, okay? Like, when one big short covers, I'm guessing it's a chain reaction. Well, I'm not guessing. I know it's a chain reaction, okay? Like, if many shorts cover, it's going to push more people to cover. And that's just that, okay? So we do have this gap fill on SPY at 373.44. Honestly, guys, I don't know if you're going to push past it, but I do want to point out that you have, like, most people on one side of the trade right now, and when that happens, you typically get some very violent rallies or sell-offs, okay? And quite frankly, all right, I think this is a great technical level for these people to start doing that. Look where we are on our oscillators. I do think, I mean, it's likely that we at least start coming back up into hitting this over here, or at the minus 100 line, just that oversold. You have this guy crossing up over here. You got your stochastic crossing up. You got your RSI over here just under 30. And I want to point out that most people use the RSI wrong, in my opinion, okay? But also Thomas Bulkowski's opinion. When it's under 30, bears are in full control. When it's over 70, bulls are in full control. All right. And I like using this just as a little thing like, hey, okay, like right now, I wouldn't be going long over here. But look at that. Once you come out tomorrow, if we have an update, we're most likely going to be stepping out of 30. And that shows that the bulls are stepping back up to plate. Okay. And it's actually at the best, like, that's the best entry for a bull to be shown the bulls are stepping up to plate, because there's all that room to run to the upside. All right. I'm not saying you get a massive rally. Okay. Because I do want to point out that we have the weekly and monthly time frame. We're going to talk about that as well. You have these guys suggesting that in their respective time frames, we're going to have the next candle be very bearish. All right, so we're going to talk about that after we finish talking about the daily time frame and what's going on in the hourly and the 4-hour. We had this divergence popping out, okay, and I also want to point out, like, hey, this is exactly how you're going to find these moves intraday, okay? You're literally going to be able to find the bottoms, the exact bottoms, and it's through these. Okay, it's through your divergences. Okay, like there's no other indicator that will consistently find you your bottoms besides these bottoms and tops, these CCI divergences that form on the 3-minute time frame. I mean, on any time frame. All right, I've talked about this extensively here on the channel because this is a great deal of what we cover here on the channel. Is like, hey, I will call out any divergence that pops up at any time frame because they mean something. It's literally, I've explained what they mean. It just means like, hey, over all the history of this ticker, okay, like that amount of buying and selling pressure would have done this. Okay, so like even though we were being pushed down here, look, you're rising here on the hourly CCI. Which tells me, hey, this is like an artificial push down, and eventually they're going to let their foot off of the tiger's neck. It's going to go the other way. All right. Now, I do think, yeah, we are going down next week. Okay. I personally do think tomorrow, or not tomorrow, but next week is going to be a bearish week. There's someone in the Webull comments that told me that, oh, you'll probably be surprised if you see a 4 to 7% move. I just want to outline how big a 7% move is and how unlikely that is. Okay. From exactly where we are now. You're going all the way up to $400. It's a $30 fucking move. You really think we've had a week of a $30 move? Have we? Have we even had? We had a $20 move in that massive week. Like that's what I'm saying. Like, my answer was, yeah, I will be surprised if we see a 4 to 7% move because the TA does not suggest it's possible, or it does not suggest it's on the table. Okay, and if the TA has been working for months on end, okay, well not on end, it's been like 4 to 5 months that we've been specifically using this style of TA. Or this combination, I guess we could say, and it's been nailing it. Okay, it has not gotten a move wrong. It really has not. But straight up, guys, like, yeah, I would be surprised because the TA, like the weekly TA, suggests that yeah, next week will be bearish. Okay, you had this low volume week right here, and then you stepped up right here. That's just how it be. Okay, that's just how it be. The volume tells the story. That's how it be. Look. You're declining volume down here. I'm gonna point it out right now. I'm gonna highlight it for you guys. You're going down there. You're going up there. Well, what happens here? You go up there on the volume. You're going down in price. All right. Then you have this one flat. You have a flat volume, like significant decline from here. Okay. And look what happened. You rose that week. Okay. And then volume tremendously steps back up. On these 2 weeks, you're falling down. Volume tells the story. TA tells the story. And it's telling you, like, hey, who's in control? Bears are control. Now, I do also want to point out the candlesticks rule. All right. So aside of what we just talked about here on the daily and hourly and 4-hour time frame, in the 15-minute, I guess, straight up, weekly overpowers all of those, and the monthly overpowers the weekly. But you got the weekly and the monthly in congruence right now, which is just amazing. Okay, it's amazing. It's like, I consider this an A+ setup. Okay, like I am very much so looking forward to re-entering, maybe even more puts than I was in before on this bull trap rally. And obviously, I will be only going heavy if I see a very opportune time, which you guys will find out about it as soon as I do. All right. Like, I'm not going to act like I know exactly what's going to happen. I give probabilities. That's what we do here on this channel. That's all TA is. Anybody who's certain doesn't know what they're talking about if they're being certain about something. Well, listen, Sebastian speaks with certainty, and I'm going to be completely honest. Sebastian is a G, and he's taught me like pretty much all the trade management that I have under my belt. That's who I got it from. Okay. I heavily thank Sebastian for allowing me to break the chains. Okay. It wasn't even like, yes, he added like a form. Like, I would have never discovered the CCI. Okay, I don't use it in the same way, the same exact way he uses it. I've never seen him call it a divergence. But once I started noticing that they popped up on the CCI, I was like, holy shit. This is like, and I noticed it somewhere over here. I was like, holy shit, this is literally how you fucking get bottoms and tops. This is literally how it happens. And it happens on every single time frame. So yeah, I'm just going to say, like, yo, I thank Sebastian heavily for that. But I'm going to say right now, like, yeah, okay, like he doesn't use the CCI in the same manner I do, and I don't know why, but well, maybe he does and he just doesn't call it out. I don't know. I have no idea. All right. But yeah, guys, I'm just saying, all right, the weekly time frame is pretty bearish. I don't know what I was just saying. I brought up Sebastian for some reason. It was probably, Sebastian speaks with certainty and he's a G. Okay, Sebastian's been around the block, right? It's been 30 to 40 years. I'm guessing he's been in the game, maybe 50. I don't know how old the guy is. I'm pretty sure he's 50 to 60 years old. I know he's been in the game for years and years and years, all right? And he was a asset banker or a banker asset manager or whatever. It's in his bio. And straight up, guys, yeah, okay, eventually I will be speaking with certainty like that. But like for now, like, yeah, I'm going to stick with, well, I mean, actually, I guess we do a pretty similar thing. It's not a certainty. It's like a certainty that there's probability that that's going to be taking place. So you know what? I take back what I said about Sebastian speaking with certainty, okay? He doesn't. He does exactly what I advocate for people to do here, okay? You speak on probabilities and you act on probabilities, all right? You do not act on certainty because that is how you get literally creamed. Okay, you will get reamed if you like are just certain about a move. Okay, if I was certain that this thing was going down here, yeah, we know it's going down the next month. But if that was my attitude here, I would just load the fuck up on puts and like I would acknowledge that, hey, no short squeeze rally is on the table here. All right, there's no reason for it. Okay, like everything's very bearish, and boom, I'd be obliterated. I would most likely have that happen, and my puts would probably go down 50%, and I'd lose half the account. All right, that's literally like, that's what happens when people are too certain about something. They go way heavier than they normally would be in that scenario. And that's a sizing. That's a sizing issue. That's trade management and risk management. You got to pick that up along the way. All right, I really can't teach that to you. I could show you guys exactly how I apply trade and risk management. But all in all, you guys are going to have to make the same exact painful mistakes that I have made over the last 1 to 2 years. And that's just that. All right, guys. So moving on to the weekly and monthly time frame, because we did go over the daily time frame in pretty detail there. And I mean, obviously, yeah, you guys know there's a bullish engulfing candle, and we do have a bullish divergence going on here. And we have the bigger bullish divergence going on there. And in the 4-hour time frame, you have a triple bullish divergence going on there. All right, like I'm just saying, guys, it was very clear that momentum was running out towards the bottom here. All right, it was very obvious, and you can even boil it down to the 15-minute time frame. All right, you can boil it down to 3-minute time frame. Come over here. Look what happened here. You kept going down there. Kept going down there. You went up there. Like, oh, that was the exact bottom. Wow, look at that. All right. But yeah, going on to the weekly time frame. This is why, like, I'm saying to that guy, like, hey, dude, TA does not suggest it's going to be happening this week. And that's because you had your confirmation close here. All right. You had your confirmation close underneath this bearish engulfing candle, underneath the wick, which just makes it that much of a stronger move. Now, I'm just saying, guys, okay, candlesticks Like, they don't have to overpower it, okay? But I will 100% value candlesticks in my TA more than I value anything else, okay? And that's just because of what Sebastian has taught me about candlesticks. Like, hey, they rule, okay? They literally rule. Like, there's no reason to ignore a candlestick. If a candlestick is popping up, it needs to be like, hey, okay, it needs to be respected. And it doesn't matter what the oscillator is doing. It doesn't matter what anything's doing. You get a confirmed candlestick, there you go. All right, there you go. I mean, it's suggesting more downside, okay? Or well, downside or upside, whatever the candlestick is. Like, it's going to be more valuable in my TA than any other aspect of my TA. All right, and right now, yeah, we got our confirmation close underneath there, and that's why I said this is pretty much an A+ setup because of what we got going on the weekly and monthly time frame. We got one more week in this month, right? We got one more week in this month. And the week gets a confirmed close underneath the last bearish engulfing candle, which pretty much confirms a move lower. Not pretty much. That's exactly what the confirmation close under is used for. It confirms the move lower. So this next candle, this candlestick right here and this confirmation close suggesting this next candle is going to be a bearish candle. It's going to close lower than it opened. All right. So if we open here, could close down there. All right. And if we do have a bearish candle, all right, and if we don't rally up into 375, we don't close the month over 375. Telling you guys right now. All right, we are going timber. Okay, the monthly time frame, like I just said, candlesticks ruled. You have a bearish harami pattern. It's this candle and this candle. Okay, it's because this is an inside candle here. Okay, that was sloppy. That was sloppy. But yeah, okay, like if this closes under here, which the weekly time frame is suggesting that we are going to be getting a further move down this week, if that's happening, all right, then this is going to close underneath where it is now, underneath this level right here, right around 375. And that means the next monthly candle, or that's suggesting the next monthly candle is also going to be a bearish candle. And that's why I say it's an A+ setup, all right? On top of that, we talked about what we talked about in the beginning of the video, which was, and now, you know what, guys, I'm realizing, like, hey, I do have to stick to the TA when I'm talking, but like in the weekly updates, there really is no way to make these. I mean, there obviously is a way to make it like a 10-minute video, but like, I'm not going to stress myself out if it's a 20-minute video. I'm not at all. And it's because, like, hey, we're covering a lot in here. It really is like preparing for the upcoming week, and we have all time frames to cover in these videos. We literally cover the big picture of thing in the videos, whereas the other ones, like, it's pretty much just a daily TA. All right, but yeah, this weekly close confirms a move lower. All right, we are also down here. Okay, this doesn't mean, like, that's what I'm saying about the RSI. It's the same with this oscillator too. This on the CCI does not mean you are going to start bouncing. Okay, when you are deeply oversold, like over here, you're at 195, and then you started bouncing, and right here, like, look where you are. All right, you're right down here at negative 207. All right, like, you are deeply oversold. Like, a bounce was to be eventually expected once getting into this oversold territory. All right, but when you're just entering it, you have room to fall. Okay, so on the weekly time frame, you have room to fall. And what I might add is, you come over here to the monthly time frame, you also have a bunch of room to fall. All right, so I'm just saying, guys, this back here reached negative 200, negative 258. Come on, there we go, negative 258, and that was all the way down here in the 08 crash. Okay, so if we get a situation that is similar to that, yeah, I'm serious, guys, this monthly CCI could get way down there. Not saying it does. I am not saying it does, but I'm saying right now, this weekly close underneath that bearish engulfing candle is suggesting that next week is going to be a bearish week. We're going to have a bearish close on next week. And if that happens, yeah, we have this monthly candle closing underneath this level. And then we are most likely going to be going way down. Okay, which honestly, I think, like, this gap fill right here, I think this is a valid target that we should keep on our board. I mean, obviously, I'm going to keep it on the board just because it's a gap fill. But just look at it, okay? When you're free falling down here, okay, you could, like, yeah, there's 325. You could come down to this zone over here, whereas right over there, all right, which is, yeah, 320 to 325. And that's what I'm saying. Like, you're missing some of the move, but it's trade management, okay? At the opportune times, you gotta take some profits. That's the point of trading, okay? There's no point in going, like, risking it for the biscuit and taking a lotto on something when you perfectly fine then just apply trade management and continuously win on like just week after week, month after month. Just see your accounts just continuously go up. Once you're to a point, like, dude, like, hey, fuck $100,000 salary paying job. Okay, like straight up, if you're making 5,000 on each trade and take 10 trades, there you go. That's your 50K right there. Now double that. Okay, that's all you need to do. Okay, like literally double that. So now it's either 10K on 10 trades, and there's that, or 5K on 20 trades, and there's that. And that's at 100% gains. A lot of these things are running well over 100%. All right, most of these trades, I like the A+ setups, guys. These are the ones that I have gone heavier on. Like I went heavier on this strictly because I'll point out. All right, we had targets on the board, a confirmed breakout. All right, which was that day, which was literally the day we started going down. I was speaking about up here. Like I was like, hey, like after this day, I told you guys that over the next few days, I do believe we are going to either get a topping tail or we are going to start the decline. And that was on this day. And then we just kept falling. Okay. Like it was literally like, hey, we got in earlier on the move as well. But if you didn't want to get in early, you could have waited for the confirmation close anyway. And just you could have gotten an absolute massive move. The bottom target was right here. That's a $50 move down. All right. And I'm going to point out how many days that took. Guys, it's inside a month. You could have bought 2 months in your contract and literally just rode that down. And there's your 300 to 400% gain right there. Like straight up, this is what I'm talking about, guys. Like once you get to like, hey, like my position size, yeah, I'm comfortable with that $5,000 level. Like I realized I was too heavy on the calls going into FOMC. I think because I was over that level, I think that's a great, like that was one of the reasons I was so like just, I was just afraid, dude. I froze up. There was literally, yeah, I froze. I let the plane trade completely get botched because I froze. I think it's because I was too heavy. My emotions got involved, and like it didn't need to happen. And in the end, like, yeah, I literally got the call gains wiped out. So I mean, it made no difference anyway. Like, who cares if there were extra gains to be had? Like, who even cares? I got all of them wiped. Luckily, the puts end up playing. They ended up paying very well. But like, hey, if I had entered the puts and left the emotions on the co rack, yeah, like straight up, dude. Like, no, those gains would be like literally more than double what they were. Well, not more than double. They probably would be about double. I bought the puts on FOMC day after they ran like 30 to 40%. I was chasing them down. It was literally so fucked. And that's emotions, guys. That's literally what emotions will do. They'll take a plan and like they'll completely make you botch it. That's what it is. All right. But yeah, guys, that's pretty much it. Like, guys, we're going lower. All right. I'm pretty confident on that one. As long as this weekly candle does end up closing at least underneath where we are right now. Or I mean, obviously at least under 376, but all in all, yeah, candlesticks do rule, and that's telling us we are most likely going to be going down. Now, that's why I was saying to that guy, yeah, I would be surprised because the TA does not suggest at all that we are going to be doing that. It doesn't. Okay, the weekly time frame overpowers the daily time frame. The monthly time frame overpowers the weekly time frame. You have the two big boys, so it's a 2 versus 1 right now. And the two powerful ones, the most powerful ones, are suggesting you have further downside coming next week and next month. Yeah, I don't care what rally you get here. Okay, I really don't. Okay, like you're most likely going to have one to 3 days of rally, and then you start hitting it with a big sell-off. Honestly, like I'm not confident on that, but I'm going to tell you guys right now, like the TA does suggest that you are going to have like maybe a day or two of a relief rally, a relief bounce, whatever you want to call it, short squeeze rally. And a bull trap rally, of course. And then they're going to take people's money again. They're going to start sending it down by the end of the week. Like, that's really what the TA is suggesting. And then next month, yeah, we have a whole world of pain. Why do you think I have October 21st puts? All right, guys. So I will catch you guys in the next video. I hope you enjoyed. Actually, did I talk about DXY? I think I did. But yeah, guys, the more DXY goes up, worse everything else is. Like, straight up, everything, okay? The more the dollar goes up, the more interest rates go up, the more the dollar is likely to go up. The more the dollar goes up, the worse it is for every other country. Okay, we are the reserve currency. Look at this. These are the main ones that I see on the news, so I added them. But like, this is like, it's crazy. Okay, like the further the dollar goes up, the further, like the more pain is going to be coming, and we're likely going to have another year of the dollar going up, just going off of Thomas Bukowski's TA. And Just saying, guys, more pain is to be priced in. Eventually, we will likely be hitting these two targets. Okay, I don't know if this target, this 145, the first target gets hit within the this next year, but I'm just saying if it does, yeah, guys, we very well could have that crash the next year, and I do believe we are going way down. I don't know if it's going to be in a crash style event, like a capitulation event, like this, like '08, like .com, but I mean. Well, actually, yeah, I would say it's probably going to be similar to this .com thing we got going here. Look, we're continuously going up and down. It's not like a capitulation event where it's straight red. It's like you have these rallies, the bear market rallies. Like this, like, yeah, this was a bear market, but look, for a few months, you just straight fell. All right. Here, I mean, I guess, yeah, there's a few months, obviously, you just straight fell. Same with over here, but you don't have the bear market rallies. Like same with the COVID thing. This wasn't a bear market rally. This was or not a bear market rally. This wasn't a bear market. This was just an extreme, all right, fear event. Like straight up, that's what happened. Okay, why do you think it happened so quick? All right, like let's go back to COVID. Look, like how many days did it take for us to fall that much? That is like, this is like worse. This might be worse than like the '08 and the .com stuff. Like 34% in a month. It's rough, guys. It's hella rough. All right, we come back over here to over here. You know what? Never mind. It was not worse than it was not worse than '08. Never mind. All right. I still don't think it was a bear market. I mean, you didn't have the factors of a bear market. Obviously, you didn't have the bear market like this is a clear as day a bear market. All right. We have continuous rallies that we get to play. Okay, and get to use as opportunities to pretty much go add to our puts, like straight up, or not add to the puts, but take the put positions. All right, like there's a reason the TA kills it, and if we didn't have these violent swings, guys, I'm serious, guys, like we would not be getting nearly as much money as we're walking away with. All right, guys, so with that being said, I'll catch you guys in tomorrow's video. Peace.